And what we're going to do now is we're going to look at how to play a continuation gap. And this is just a really good example. We're also going to look at Twitter after we look at this example. So we're going to look at both progeny and we're going to look at Twitter. So this is yesterday's candle. So ladies and gentlemen, again, just since it's an educational environment, judgment-free zone, what is the trend of this particular stock at the present moment in time? What would you say? What is the trend? You have 2 seconds to get it right, and that is the correct answer. The trend is up. Okay, so we have a general idea of how we're going to play the stock. We're most likely going to play it bullish. All right, cool. Now, what you'll notice is this candle has a cute little upper shadow. Would you guys agree? So cute upper shadow on progeny. What does upper shadows mean? Upper wicks. Upper shadows and upper wicks often mean that you have a little bit of selling there. Right? Some people trying to short, some people selling to close, some people getting out of a position. Bottom line, some people who are betting against the stock. So what I love to do when I play continuations is continuation is simply the continuation of a trend. Right? That's what continuation means. What is the trend? And I'm continuing the trend. Then what you'll notice is this morning, progeny was gapping above the high of yesterday. Now, not only was it gapping above the high of yesterday, but check out some other highs it was gapping above as well. Boom, right there. That's what made it a little bit better. Is yes, it was gapping above the high, but that wasn't the only high that was gapping above. There were some other wicks, some other prices where people were shorting from previous time. So that makes the gap a little bit better. So now the question is, how do you play a continuation like that? And the answer is, you zoom into a 3 or 5 minute chart, you wait for the retest, and then you play the continuation of the trend. This is the retest. A retest is often defined, retest equals sideways movement or a pullback, but simply a rest. Right? The word rest is in the word retest. So you want a rest. You want a calming period. You want it where it's not doing anything too crazy. And specifically, you are looking for some bearish candles to get taken out. So when I say get taken out, I mean for the stock price to go above those candles, AKA this bearish candle right here. These two candles are high wave candles. High wave candles. These are my favorite candles to day trade based off of. Because a high wave candle represents what, ladies and gentlemen? Who can tell me? Who wants to give me the answer? High wave candles represent indecision. And indecision eventually becomes decision. So when decision becomes decision, I like to decide. I already know the direction that I'm going to play this in. All right, the direction we're going to play this in is the direction of the trend. It's not that hard. You just don't overthink it. The direction is bullish. I'm going to wait for a retest. I'm going to wait for some indecision, and I'm going to get in long. And that would be the setup. Entry would have been there. Stop loss would have been there. You would have exited a little bit at the new high. You know, not a lot, but 10%, 20%. Sell some calls, sell some shares, whatever you're doing. Exit something. And then now you wait. Susan says they are also called dojis, correct? Kind of. So all high waves are dojis, but not all dojis are high waves. So technically, I wouldn't call these a doji candle. No. I would not personally call that a doji candle. I would call that a high wave. A doji candle is a perfectly flat, open and close are the exact same candle. So that's what I refer to as a doji. That specifically is a high wave candle. Now, Twitter was the exact same setup. Twitter was almost identical, ladies and gentlemen. And this is one that we looked at in the afternoon room. For those of you who remember, type in an 8. Type in an 8 if you were in the afternoon room where I said, and I quote verbatim 2 or 3 times, hey guys, I think Twitter is going to form a very similar candle to this. I don't want to swing trade it, but I'm going to watch it for a gap up and a continuation tomorrow to play it bullish. End quote. Now, that was a day trade analysis that I did over 12 hours ago. Do you think that's valuable? Do you think that's useful? Do you think that you can implement that in your trading? Right? I gave you 12 hours of notice about what stock to look at for a day trade. All right, so here's how we would have played it. Here's how I analyzed it, and here's how, again, a lot of traders played it. The very first candle that came out, what type of candle was that, folks? That is a high wave candle. All right, so the very first high wave candle, your entry would have been there, stop would have been there. Well, that did not trigger. So the next candle comes in, strong bearish candle. All right, the next candle comes in, strong bearish candle. But what happens after the next candle, AKA this one? This candle is a bullish candle. It's an inside candle, and it shows you, hey, the bulls are here to party. They're showing up with a keg of Bud Light and some ping pong balls. Who's ready to rock and roll? So you have a nice bullish candle. It's inside the bearish candle, and then you get this guy. Now that, Susan, is a doji. What do dojis represent? Indecision. So that would have been the moment where you go, okay, cool. This is the spot I'm getting in. You have a morning star reversal on a retest gap, which is a white candle gapping up. This is the retest. Let me remove all the colors. This right here is the retest. And obviously, if you're an absolute master, like one of the greatest traders in the world, you probably could have bought right there. But I'm not that good. Sometimes I got to wait for candles to tell me to get in. So this would have been the entry, as you see on the screen. Robert says, I made money on your analysis on Twitter. Yeah. Nice, nice. So 3302 would have been the entry, pretty much getting in above this bearish candle, right? We talked about just a moment ago, you want to wait for bearish candles to get taken out. So there's your bearish candle. There's it. That's it getting taken out. 3302 by 3284. And right here, this is where you would exit some of your position or all of it, depending on how you're doing for the day or the week or the month. Right? A lot of those factors kind of come into play. And I got tons and tons and tons of videos about that, but it just all kind of factors into how well are you doing? Do you need to lock in gains? You know, have you taken a few losses recently? Do you need a little bit of a confidence booster? That depends, because that particular trade would be like a 1.25 R win. That's a pretty solid win. So that is, ladies and gentlemen, pretty much in essence how I trade these really small micro gap continuation trades of a trend. Any questions about that for those who are here live? And if you're watching this in a recorded version, feel free to post any questions you have in the YouTube comment section below or on our website, or you can email me or message me on Twitter, or pretty much any other way you want to contact me via social media. I do that stuff. So you guys good? All right. Well, let's hop back over to the trade that a lot of traders are also in, and this is Canopy Growth, and we're chilling out right now. We are trading very sideways. So this is a retest. So I'm trying my absolute best to be patient. Volume is declining, and I'm hoping that we break out. And when we break out, I will look to sell on the breakout when we make a new high. The longer we trade sideways, the longer the breakout could be. And I'm waiting for the 10 EMA to actually interact with the stock price before I do a lot of stop movement on Canopy Growth. But right now, it doesn't look awful, and I'm just going to sit back and let it do its thing. Chris says, define a micro gap as opposed to a gap. All right, very easy. Great question. Okay. Chris, you probably can already see it. But here it goes. This is a gap. This is a micro gap. Make sense? So a gap is a massive move in stock price. A micro gap is just a gap that happens pretty much every day. So that's how you can play these continuation plays. Beautiful. Good question. Awesome stuff. Thanks for watching, ladies and gentlemen. You are incredible.